everybody see everything? Is everything good? I'm guessing it is. Okay, so let's start on gold. All right, gold has been in one of these ranges I like to call where it needs to build liquidity. Whenever you see this move down here, I've always realized in my journaling, whenever I see these type of moves where they just push down and induce traders as far as this, so we induce sellers in this scenario. This big push just lets me know that sellers have been induced in the market, yes. We want to know how we can involve ourselves in some sort of buys. That's what we're looking at, but there's nothing to go off from. There's nothing to go off from as soon as the low's taken. So these scenarios are pretty much a waiting game in a sense, because you have to wait for price to essentially pull back into some sort of areas in these regions, respect it, move away to build some sort of liquidity in the market. So these can kind of get a little bit tricky because on the intraday time frames they can show something that you may not really see. So let's get into it. We induce sellers, we know that. BOS to the downside. So in any case, we know selling would be high risk. High risk because sellers have already been induced, so we need to look at price from the grand scheme of things. So 4 hour, we take the low, now we react. We have this inducement high, price took it. This high here, but what did we do before? Let's go into it. So this here was our inducement high here, because if we look at it from this perspective, from that high to that low, we induce sellers. So once we see that in the market occur, we know once this low's taken, my thought process would be, okay, I need to see something happen as far as if we can return back to this region. If we build up, we could potentially get a trade as far as if we respect it, move away, and then we can trade into that level. But in this case scenario, what happens is this is what we get. This whole area, we can mark out this whole area. Respects price. I necessarily you could say it to set this out, but in my opinion, I don't see there's anything that you could go off of as far as like an entry, unless. So we induce sellers now after respecting this high. So after we respect inducement high, we induce sellers. So that lets you know that, okay, now we have resting engineered liquidity above here. So now that we know that, we want to continue with that buy bias. Let's see. I'm trying to see if there was some sort of long here. I don't know if I can justify this as me being long, because you get induced up here, and then it takes out this. In a live market condition, I don't know if I'm taking something that intricate, and time of day is just off, so I'm not gonna sit here and say I would take that entry. But in any case, the direction is paramount. So we get the direction. That's the only thing that really matters. So price takes the inducement high. You took that, and that's the only entry I could find since. It's valid. I can't lie to you. It's valid, but I can't lie to you. In live time, I probably would have missed this, because I most likely would have been looking on the lower time frames. Maybe the lower time frame would make it clear. Oh yeah, it does make it clear. So I can see why you would take this. But me, honestly, I would be off the charts. I would be off the charts at around 12. So this is just honestly a great catch, especially if you're trading CFDs. Even if you're trading futures, you could have held that. So just for visual purposes, you could have held this trade if you took it on futures. That's actually pretty decent. So yeah, good fucking catch. All right. Moving on, we took the inducement high now. So now we know that we induced buyers into the market. So now that we know we induced buyers into the market, this is where price starts to get tricky. Because yes, we have that overall bullish bias because we've taken out these lows, yeah. But we just taken out inducement high, inducement buyers. So what we expect price to do now is start to react off of areas from the left and build liquidity. So now we see price reacting off of this area from the left. As you guys know, in previous webinars that we've all stated, whenever in a case we have that break of structure or buyers get induced or trapped. So let's say, for instance, we induce sellers in this. For instance, everything from the left should be used as a false reaction. No matter if it's a liquidity block or whatever, we broke structure. Yes, the liquidity block is there, but it will be used as liquidity in a sense. So we react off of this area here, yes. So that gives us the notion of this right here is all high risk conditions. This is the type of price action that you kind of want to stay away from because it's not really telling you anything. We only could go off of that we induced buyers. We need to see them trapped, yes. So since we need to see them trapped, it's kind of delicate how you would want to approach price. But I want to break this down too because I had a missed trade in this area. It was a high risk trade, yes. But my whole direction was me panning this out. Since buyers were induced, I knew that I wanted to see price below this daily low. I'm pretty sure I can show you the forecast too once I pull it up. I'll send it. But so I want to look at that price action in that area, that red box. Okay, so at first it was kind of confusing just because we took out a high in here, but this is what happens whenever you're so zoomed in. Just mark out the whole area. The whole area will give you clarity, honestly. So we took a high here. So since we took in that high, we have to understand what took that. What is the reason that high was taken? So this is what gave me, conviction and looking for sells. So we started off doing this. BOS. Okay, so now we get that like staircase type price action, if you know what I mean. So price just moving up, reacting, moving up, reacting. So basically building all this liquidity in the market for us. So I'm going to drag this out because that lets you know that we have engineered liquidity at these lows. So what we do on Wednesday is we trade into it. I was kind of active on Wednesday, but I wasn't really too much focused just because I had so much going on. So I wasn't so sharp to really catch an entry. But we trade below this low actually, right? So we induce sellers. Cool, fine, but we still have liquidity to the left. So there's no sort of buying that needs to even come across your mind, trust me. Do not look to buy anything. So we get this BOS in the market. So we take out the inducement high. Take out the inducement high, break structure. Now this move right here, right? Oh, snap. Okay. Two things that I want to emphasize. How does that even happen? Okay. Two things I want to emphasize. The fact that we get this move here and we still have this liquidity to the left being respected and we do this, we break structure, that's like A plus conditions that you want to see to take a trade from. So in any case, if you want to look at it from a Da Vinci standpoint, you still have resting liquidity to the left. You respect it, you move away. This is what we mean by move away, guys. When we respect, move away, and moved away and did what? Took out an inducement high, and that breaks structure. So while that does that, it creates what? Liquidity block. So since it creates the liquidity block, we also know that we have this LB that, people are looking to trade from, but it's a trap. So we're going to use that as liquidity. We want to see price respect it. We want to see price respect that LB here. We want to see it respect it. We want to see price move away. So basically the same step that we saw here, we want to see that reiterated right here. And we get that by this inducement high being taken. So once that inducement high is taken, literally just sell. So me personally, I would put my SL above here just because of it looks like so much resting liquidity here. Then again, that's why I said this was probably a high risk trade just because of these highs over here. It's kind of difficult to take this, in my opinion. It's very difficult. But like, you have to be okay with taking a loss in this scenario. So targets, we have this low here that's reacting directly off of this low. This low is reacting off of this low, and what's reacting off of that, the low below it as well. So you can literally just see that from here is where buyers were originally induced from. Target that low, boom, that was your Wednesday, and that was at 8:30. Pretty clean. I wish I got involved in that, but it is what it is. I mean, counter bias move in my opinion, but it was valid in my opinion as well. And then we get price action from Thursday, so kind of boring in my opinion. Oh, this is still Wednesday actually. So this low ends up getting taken. Price runs for these internals. Nothing in here in my opinion. Absolutely nothing in here. So we respect this. Just build up liquidity. Take out a low. Nothing of significance, I promise you. Nothing of significance. Yeah. It's still buying in no man's land if you were looking to buy here, just because if you remember what I said, that buyers were induced originally from here. So we still do not want to be buying anywhere above this low. And why did I have this low marked out specifically? I didn't refine it or anything, but it was the daily low. It was just easiest to spot. So you have liquidity block here, this low being your liquidity block, this candle, last low before the liquidity block. You could potentially see the reaction. So, and if we clear this up, because it's a 30-ass chart, where could we see price to next? Here. So then again, like I said, these scenarios, you have to wait for, price to essentially build liquidity, then react off of some sort of trap area, sell off. In this case right here, this is what you get. Question, price swept the daily low, but if we go to the 4 hour, it seems build liquidity on the 4 hour low, which is inducement low. What's your view on it? Why that candle? Last low before the liquidity block. Let me answer your question right now, Mike. So here was my perspective. I can see what you mean as far as this. I might be wrong in a sense. Don't quote me. I see You probably mean this, right? Yeah. Okay, so what I saw, right? Because initially I did see that, but then I just used this whole area as my LB. So this is why I didn't take any direct entries off of it, because like you, I was torn between both ideas, honestly. So that's the only reason why I didn't take direct entries in Asia off of this area, just because, I saw it from that 4 hour perspective, as far as like, damn, you won't really see the LB here, but I see it here. So I'm more than willing, because remember, this LB was formed by respecting this inducement high. So that was formed from doing that. And this push up was from this candle, essentially. And what did we get from that candle? We got to build up from this area. Look at how we respected this area. And then we had that. We initially took it out. So then, now my eyes are looking to the highs. Why? Because we have created this inducement high now. And we also have liquidity to the left. So, like I said, in these scenarios of when we get that crazy sell-off or that crazy buy-up, it's gonna, it takes you to dissect price like this a little bit. So it's a step-by-step process. You see how we waited for this inducement high to give us direction. We sold off. You could buy into that. Okay, once that target's taken, wait to see whenever price respects liquidity again, has that sell-off again, to trap buyers. So then we trap buyers here. So now we have direction again. We're aligning our direction back with the higher time frame once these buyers get trapped. Now direction is aligned properly with with sellers being induced, because now we have engineered liquidity in the market. So last imbalance candle can be order block to take long. I'm not gonna use that terminology because it could get confusing. But all I will say is it's the same on every time frame, guys. I mean, whenever there's a case of whenever you see an inducement low or an inducement high, and there's a liquidity block below, this is essentially my inducement low. This candle here is essentially my inducement low. And this is just the liquidity block. So what you're doing is you're banking on this area being respected as it's a liquidity block. So once this area is taken, price should move up. And it's the higher time frame, so same applies on the lower. This is honestly my direction on gold for now. Like I said, for now, I just want to see price towards these highs, and we'll go from there. Any questions on gold before I continue? Actually, I didn't go over this. This was gold yesterday. Gold didn't really do anything like spectacular. Just respected this, but it also left these lows here. So in any case, I potentially would not be wanting to buy anything above here. I need to see some sort of trap or price respect, and then price just dump off. Who knows? Who knows? Is it like a checklist thing to see on the chart? It's not a checklist. It's honestly just where's the intention coming from, right? So notice how from clear as day, right? It's this high. So you get that structural high, right? Look at that push down. So now I can figure out where's my inducement high, this high. And notice how we have a build up at that. There's an inducement high there. Notice how, same here. There's an inducement high there. I mean, all it is where is price being induced from? So basically look at a breaker structure, right? If you look at a breaker structure, let's do a drawing here for you guys. So in this case right here, we have an inducement low. Why? We broke structure here. Yes. So since we traded up, BOS, have a build up, we break structure, we respect the low, boom, we take out said high. This low right here, all it's doing is inducing buyers to get in the market. All you're expecting is a potential build-up. Most of the time, there will be some sort of build-up at an inducement low. Also, if you see an inducement low or inducement high, 90% of the time, if it's a liquidity block, you will see a reaction from it. But if not, the price can just honestly blow through it. But in this case, inducement low or inducement high, it's not really a checklist thing. It's literally just a visual thing, honestly. Wherever you see price being induced from. I don't know if the terminology itself is what's confusing you, because if that's the case, then that means you have to go back to the basics of the strategy. Sometimes, okay, I was thinking that must be wick on candle for traps, no clear full body. Nah, it has nothing to do with like a wick or full body or none of that. It's not that, it's not like that, trust me. Trust me. Because if you look at it, peep this. Doesn't this whole thing look the same as that? You can't tell me that doesn't look alike. You can't tell me that doesn't look alike. You see how like price is like kind of telling you what the direction is when you look to the left? It's repeatable. All we did now on this side is respect here. Trap buyers. Now we're doing the same shit. Going up. Yeah, I just try to use the terminology a lot more, just so it can get into your head. So whenever you see the other mentors use it, or you see other videos, you watch other course content, you watch the old stuff. It's gonna click to you whenever you start to use the terminology over and over and over. What's good, Adam? How you doing, bro? Hi, bro. I have some questions to ask about. It's that Monday to Friday. We can find set up in New York for entry. I went over gold already. There was only an entry. Potentially, there was that entry on Monday. I know Mike said he took that, and then there was a potential entry Wednesday. The entry Wednesday was a little bit high risk because remember it's off the premise of expecting this trap area to hold. So you're expecting the trap area to hold, and you're expecting price to respect this area and move away, right? So those are like the counter bias moves that you're taking with liquidity in a sense, but it hasn't been engineered yet, right? Because liquidity is only engineered once it moves away and takes the low. Now there's liquidity up above here. Because there's a lot of times where some of you guys are just targeting a high to the left, but the price has done nothing to target that area. So say for instance, right, like you're trying to take a buy, but you're trying to target some shit over yonder, and it's like, why? They're like, price could easily tap into some area in here and then die. There's no premise, there's no liquidity there. There's no reason for you to be targeting that high just because it's a high. So same thing with a sell scenario. Remember, we want to see that. We want to see this area get respected. We want to see price move away. Once you see that sellers haven't been induced or buyers have been trapped, there is now engineered liquidity above this high. So let me mark that up. That now there's engineered above here. So that's direction on gold. Cardstick, if you watch the recording later, you're gonna see the Monday and Wednesday. I just want to keep going because I think NQ had some decent PA. Let's see. All right, so I wasn't so active lately watching NQ, but when I had the forecast, I think it was what was it, like a couple weeks ago, I said price was trading in that range, that monthly range of this low and that high. So it was very hard to get a read on this price action whenever it was stuck in this range. I know you guys all remember that, like when price was all trading in here. So that's why I literally just left NQ alone. There was no reason to be trading this because it's just a mess whenever you're trying to figure out which one is it going to take first. Like price would literally respect an extreme and move away, which was absolutely crazy. So now we get some sort of intention now. The fact that we've taken a high, not only taken a high, well, that's actually created a liquidity block, and then it also died after. So now those lows are being taken. Now we have direction. So why is it not like magnetizing? Okay. So now we know that we can see price to this low and potentially, these lows to the left as well. So NQ, there's your high time frame direction. We can kind of dissect what has been going on lately. All right, so once we've taken out this high, we know that anything that we get as far as a reaction from these lows should be false. False in a sense of we should react to it, but it's not going to be the move that will create a new high. So just because we react to this doesn't mean that we're going to have that move that creates a new high in the market. It's just not going to happen because all this is doing, there's not sufficient enough liquidity for price to just take this high and just dump off. Price needs to generate liquidity in the market. So we do that by inducing traders. So now we react off of said low and then we trap these buyers. So now once the buyers are trapped, we need to wait, right? Because right now, if we're playing with higher time frame direction and we know that we're bearish, when we get in a scenario like this, once a low is taken, after we induce sellers, we do not want to look for any sort of buys because at the end of the day, we know that buys are still high risk. Although I'm on the 1 hour, you still have to keep in mind, one, you have these lows to the left. Just because you take in this low and you would see it as a LB doesn't mean in any sense that, oh, I should wait for price to respect this and then take a trade once I see some sort of internal taken. No. Remember, higher time frame direction is paramount. So what you get there instead is you get your inducement high that gets taken. And you also have a liquidity block at the low here, which will generate false reactions. But you also have price reacting off of said trap from the left. So whenever you just know where the traps are in the market, it gives you a clear lens on where to not trade from. And it's just a waiting game, honestly. It's just a waiting game. So we take this high. I don't see the left as it being an LB. I mean, could you argue that that's LB? I mean, it takes this out. Kind of argue that it is. And then it goes all the way for the extreme. So notice how price goes all the way for the extreme. Would I have taken that? Fuck no, because who's honestly going to be able to take that? You got to be a god these days. So we have this build up, which is actually pretty something to look at. So we induce buyers, create the trend line of death, and then die. There was actually a trade here, actually. I remember now. So you don't take the direct entry off here. No. Where's the brush tool? You don't take the direct entry off here now. You wait for the confirmation. So I think Adam took this, because if you did you take this, Adam? I think you were about to take it. But what we have here is we induce buyers. Here we've taken out liquidity from the left. Cool, check. We also react from this low, which is very important. Remember what I said when we react from lows? All you got to wait for is price moving away. That's what you want to see. So we have price moving away by doing what? Breaking structure. Doing also what? Inducing buyers. So while you have that, you also have this LB here. Me personally, cover the whole high, because why not? I'm not that greedy, honestly. I'd rather be in the trade, because imagine if it takes this little ass high out and then dies. I would be gutted. I've seen it happen. I would honestly probably, yeah, I would be gutted. And this is just like, I probably would have just been out here. This is, what is this, 8 o'clock? Very unlikely for me to take this entry, because I'm just now getting at the charts at around 8 o'clock, but follows the system, you know. Liquidity from the left taken, early traders induced. You know, we respect the build up, and then we also induce traders from reacting off of that build up. So that gives you conviction to take the sell. If price doesn't break structure, then you wouldn't consider there to be liquidity at that trap. I'm trying to like visualize your question right now, because I was probably talking too much. Is 8 a.m. New York open valid session for you, or 9:30? That's a great question, because early when I first started trading futures, I was taking positions before 9:30, but I did take a lot of losses at that time. But I did also take a lot of wins too, like a lot of crazy wins. So it's very subjective. If I look at it from a data perspective, these days I probably won't take anything before 9:30 that has anything to do with like some sort of lower time frame entry. This is like a 15-minute entry. I mean, if it's clean like this with a direction like this, it all depends on how the scenarios panned out. You know, like I'm not just gonna take an entry just because I'm feeling like it. If the stars align and the time is not so great, then I'll take the trade, yeah. But my risk will be significantly lower. So could you definitely use 8 a.m. as a confluence then? I wouldn't say 8 a.m. open New York is any sort of significant confluence for indices. That's what I would tell you. I don't think it's a significant confluence for indices like 9:30 is. Because at the end of the day, you have to understand that just because New York opens, you have to remember there's still resting orders from yesterday's stock market close. So all of that liquidity gets injected at 9:30. That's why there's that fucking spike. So that's why it's like I kind of don't like to take crazy like lower time frame entries way before. But like I said, If the stars align, I will take a very low volume entry. But this was clean, very, very clean, as far as a confirmation entry. So yeah, if we're focused on the direction aspect of NQ, why was the short taken? Remember, if we can do a checklist for you guys to make it easier. Liquidity from left taken, yeah. We have, oh, hold on. Yeah, we have early traders induced. If you're asking where's that at, where did you see early traders induced? I'll show you right now. We get them early traders induced from here, which gives us our inducement high, yeah. So early traders induced. Where's my? Okay, let me like put it here so you can actually see it as well. Okay. We have build up, or let's say trap, if you know it resonates with you more. Trap respected. So trap respected. And then we have price takes out inducement high. And then you also have LB above. There's your confluences. You also have a shit ton of engineered liquidity to target. So I can guarantee you none of this matters without this direction here. I've seen it so many times in my journal. None of this matters at all without this direction here. It does not matter. Let me clean this up for you a little bit. It does not matter without the fact that we've induced buyers. We're respecting liquidity from these lows. So we have engineered liquidity at the lows. None of this entry criteria matters without the direction. From here to here, that lets you know that yes, we're respecting an area from the left, but buyers have not been trapped yet. So once we induce higher again, that's inducing more buyers. So once the sell is taken, target's taken, buyers are finally trapped, and then price dumps off. So now we're at the like extremes of NQ. Highly unlikely that price goes all the way above. Here was my kind of forecast for NQ. I wanted higher above daily high, and price did that. Let me see if I could find Zella for y'all, so I'm not capping, you know. So I'm not specifically capping. Okay. Are y'all able to see the trade Zella? You might not. Okay, but you'll see it in the recording. That's fine. Okay. So I had the daily. I had price wanting to go above daily high. So, recording people, you'll see this. Let's go back. Okay. Here was a kind of easy way to pick out some sort of direction. So reason why I kind of anticipated price going above the daily high. Sorry to say it in hindsight because I didn't send no end of day yesterday. I just couldn't. But notice how we've induced all these sellers were trading at the extreme. We know that we could potentially get some sort of reaction here. So knowing that buyers could potentially be induced, this is how you can potentially play a counter bias day. So let's move that alongside because that's messy. So once we get here, okay, here where it was. We traded above this high. So since we traded above this high, it was very imperative to know that we've induced buyers. We also have this liquidity block here. So let me save you guys from a lot of losses. Yes, this looks like a trap. Yes, I know it does. I know it does. I promise you, I know it does. But here's what we have here. We've induced buyers. We've taken out liquidity from the left. But look at this. We induced sellers here before we've tapped this liquidity block. So I've seen a lot of people that said they just take the direct entry off of here. I wouldn't. I just wouldn't take this entry. How do you know that this area to the left is going to hold? How would you know that? I possibly just don't know that. So I wouldn't take that. I would wait, see if it does hold, and then see if I could find something else in particular. What is my daily chart time like? Mainly just I start the charts around 9 o'clock because I have to do a morning routine before the charts. If not, I just won't perform well. 9 o'clock to 11:45 is how much I'm on the charts. It depends. If it's a slow day, I'm getting off at like 11:15 though. And now from where you can see the next entry for sale, I can't tell you that. There's no price for me to go off of. That's the thing, guys. Like, just because we know like we can find direction in these areas doesn't mean we can find the next potential entry point. That's not how the strategy works in a sense. This strategy is more of a reaction based strategy. You need to see where price is reacting off of, and that could change from today's data compared to Thursday's data. You can't just pick out a high or low and say price will reverse from this high or low. That's not how the strategy works. That's just not how it happens. So then again, we induce sellers here. We induce sellers here. We have that LB below. So now that we induce sellers here, I do not want to be selling above anything above this high. I mean, below this high. So now I know this high will be used as a liquidity point. Me personally, I missed the buy entry because I had my buy below there covering this. So I was kind of shitty the fact that it actually respected this. And I saw Marco post a chart because I literally just didn't see this. I just literally didn't see this. So this was my entry that I wanted. And I was going to target previous daily high. Really good trade. That would have been my trade for the week. But we didn't get that. So what happens is I did see Marco post this, which had me like, how did I not see this? Like, I have glasses. So we take the low. And where did that come from? The reaction off of the inducement high. So liquidity block created. And then you also have said build up. Like, this even makes it better. The fact that we react off of the inducement high or the trap, and then we sell off, taking out the build up. Just buy. Like, who cares if the SL is bigger? The criteria is met. So that was a valid buy there. So I mean, it's literally the same RR as my entry. I just overlooked it. Sometimes paying attention to detail matters, because I just literally did not see this candle formation to know that this was a liquidity block that formed. So yeah, it is what it is. That was NQ on Friday. Pretty clean to kind of find a counter bias move, but it all starts off of the higher time frame. Would you consider the way price pulled back violently after respecting? Price pulled back violently, like pulled back like here. I don't know if it would have gave me like so much conviction, But just the fact that it respects its area and moves away, taking out some sort of low, that is what gives me conviction. It's nothing really about the aggressiveness of price. I mean, it plays a role into it because if you see it, there is a build-up area here. Like, this is a build-up area. So, yes and no. I just never thought of it like that. So, okay. Yeah. That's NQ. Do you guys have any questions, really? Any questions that we can go over? What is the difference between a ticker? So, NQH is the contract for the quarter, essentially, or for the month. It NQH would be different in the next coming months, probably to NQZ or whatever it will be. It's nothing really different. I mean, if once you go to NQ1, you can trade the specific contracts by pressing the BADJ. So if you're on NQ1, if you press BADJ, it'll adjust for any contract changes. So there's nothing really different. For NQ next week, so direction, we must look bearish and target 24 at 155. I don't know. I can't lie to you, I don't know. I have direction as far as this low being there, but I'm not gonna say sell every time a high is taken because I don't know where this could stop at, you know? Like, honestly, you know, we could get a false reaction and price trade all the way up here. Who knows? Who knows? Or, you know, it's just so many scenarios that could happen. That's why I said the strategy is like more of a reaction based. See what's in front of you that day, and then you can go off of that data to say, okay, this is what price is doing. It's inducing sellers, so stay away from that. Like, I can't really tell you. I wish I could. Trust me, my strike rate would be better. I'd make so much more money if I knew the answer. Maybe it's a higher time frame and it did move up violently like that. I'd be hesitant to long it back up since there's not much liquidity on the way up. I gotta test it more, even though direction is correct. Yeah, I mean, it's really just off the premise of this low being taken. You're anticipating that this would get respected, and it's just a daily high target. That's all it is. Because if you just look at it like BOS here, BOS here. So basically 2 days of price inducing sellers. That's really all it was. Just me saying, okay, why can't price respect this after taking all these lows and just take the daily high? To the long that I missed? Oh, the long that I missed. Oh, yeah. I mean, yeah, sometimes it's, like I said, it's an attention to detail thing about missing it. Of course, we have some liquidity on our. Holy shit. Yes, of course, we have also some liquidity on the high time frame, and we must wait what will take. Yeah, I mean, I'm not going to say we're going to go bearish just because we've taken out a daily high. I don't know. I don't know what NQ wants to do. I know that the higher time frame outlook that I have is bearish. That's all I know. We induced buyers. Now we're in the extreme. But that's all I have for end of season and gold today, guys. That's really all I have. Do you guys have any questions? Oh, somebody asked me what is my routine. Sorry. I wake up. I have to do some sort of like self-regulating practice, like breath work or meditation. As corny as it may sound to some of you, it's very important. I promise you. Whenever it comes to regulating your emotions during trading, I promise you. If you can feel the difference of not doing anything to regulate your emotions before trading. You can literally feel the difference. So if I don't do that before a session, I do feel myself being a little bit more emotional than usual. So that I will review my plan. I have it pulled up next to me. I also have my journal from Rewired that I just write in every day. Like what's the goals for today, shit like that. I usually have my day planned out from the night before, so that's all it is really. Nothing too crazy in the morning. I like to keep my morning routine, something that's easily repeatable and at least 15 minutes maximum. Because if you're doing a morning routine that's like 45 minutes, there's no way that you're gonna be consistent with that. Something that's, that will move the needle for you, that you can get done in 15 minutes, like whatever gets you in that flow to be, trading at your best. The way you explained the first gold short trade was crystal clear to me, and that made this webinar for me already. Oh, no problem, bro. I try my best to really articulate things in a way that you guys could understand, and honestly, it just helped me because, that's the way, the guys taught me. So I just try to emulate what they taught me. Give us some idea about your daily plan. Like, daily plan as in what? Like, daily life or just trading? Like, trust me, my life is a little bit different than y'all because I did work overnight. So it's kind of fucked. So as far as trading, like my trading day would start as soon as I used to get home from work, which would be like 5 a.m. So mind you, I still have to get like some sort of sleep. So, I would, it depends. If I know that I'm going to wake up late for New York, I'd have to do a forecast as soon as I get home from work. But like I've seen it kind of bite me in the ass sometimes, right? Because I would be like, yo, like I'd wake up and be like, what the hell was I looking at? Because this does not make sense. So I would just try to wake up earlier or just stay up and do a forecast. But as far as my daily plan for trading, clean my charts, like literally clear all drawings. First thing I do, I make sure I do my morning routine before I even open the charts. Have my plan next to me and just mark it out. I mean, you guys have the trading plan section. I think I created that like 2 years ago. You guys still have access to that. My plan hasn't really changed. I just probably optimized a few things, like a few words for me to better understand, like depending on my journal data, probably just made things a little bit more clear for me. Some things I took out that I didn't really need to look at. That's really it. How do you plan your trading weekday? Do you stick to only to shorts or long with your plan, or if the PA gives you a new view? I don't really plan each day or week, just saying, okay, I'm gonna be short this week or long this week. I go off of what price tells me, to be honest with you. Yeah, I just go off of what price is telling me. It's not more of a thing of I have that planned out, but I forecast it. How would you go about back testing daily basis and directional time frames to stick to and previous months or years to start from? As far as back testing, that's subjective. You don't really need to stick to, specific months or years. I mean, it's just getting data, on your strategy. You could go as far as you want to go. Time frames, just use the time frames we all use. 1, 3, 5, 15. I mean, there's no specific time frame that's better than the other. Remember, it's a multi-time frame analysis thing. It's a multi-time frame analysis thing, so you have to, use everything in conjunction with the other. Where do you find it? You have to be a course member to see the trading plan. You print those on paper. Yeah, trading plan, the theory, direction. Good. If you have it on paper, that's actually, you probably might memorize it better, or if it's right next to you on your desk, you won't forget to look at it. So that's good. But yeah, as far as back testing, you can do whatever you want with back testing. Have fun with it. Honestly, you're really just trying to collect data and see how, how you're going to be performing over the course of time. So don't really limit yourself to, only using 2024's data. Go back to 2023, 2022, But yeah, guys, that's going to be it for this week. It's been an hour, so I'm glad that we've been able to have me back on the calls again. So I will see you guys next Saturday. Hopefully you guys, trade safe on Monday. Make sure you get your reps in. And yeah, for sure. Be safe, y'all.